Oh, freaking bags, baby, yeah!
So GM, and welcome back to the channel. In today's video, we're taking a look at the Tether Bitcoin bid that has just entered the market. So let's not miss the irony of this one in terms of the US government increasing the interest rates that is now funding Bitcoin purchases by Tether due to the fact they have huge treasury bill holdings. So if you're interested in this one, make sure you subscribe to the channel, like the video, comment down below, give us all a GM in the comment section. Let's go. So yesterday's press release was a very interesting one from Tether. So the company talks about its reserves within this, and it states that going forward, they're going to be pushing some of their net profits directly into acquiring more Bitcoin. So this comes to the tune of 15%, so up to 15% of their net realized operating profits will go towards BTC purchases. So we have essentially a TWAPper entering the room, time-weighted average price, someone who's just consistently buying Bitcoin. It's almost like having a Sailor Part 2 here.
There is no second best.
And if you see the bottom highlight down here, Tether already held approximately 1.5 billion in Bitcoin in its reserves. So that was in their Q1 report that came out at the end of March, where they stated the following facts. 1.48 bill of net profit was the amount for Q1, during which period they increased the circulation of Tether by around 20%. So Tether dominance and Tether in circulation going up, that is very healthy. And they closed the first quarter of 2023 with $81 billion in consolidated total assets. And this is the bit which is rather funny. The majority of its reserves are held in US Treasury bills. As interest rates go up and their holding of US Treasury bills is huge, as they state, the Fed's fund rate being high is therefore the infinite printer for Tether, and Tether now converting 15% of those profits into Bitcoin, while it is just rather hilarious and a storyline I can definitely get behind. So let's jump into the tweet thread by Paolo, who is the CTO of both Bitfinex and USDT Tether here. So he says, today we have roughly 2.5 billion of USD or equivalent in company-owned excess reserves. Now, why does he state excess reserves? Well, Tether has excess above and beyond the 100% reserves necessary to back the issued tokens. So there is backing for each and every USDT out there, plus a surplus of around 2.5 billion or around 3% in total. So think of it as backed by 103% in reserves. He goes on that the excess reserves have been accrued through interest rates on our massive T-bill portfolio and other investments such as gold going up quite a bit. So this is pretty interesting stuff here. They talk about the fact they don't do fractional reserve banking like a traditional bank, and that they want to keep a nice cushion to ensure they're protecting their user base. So what they're looking to do is further diversify the reserves, and they want to increase Bitcoin holdings. They currently have around 2% of the portfolio in BTC. So the figure on this is they currently have around 1.5 bill in Bitcoin versus 2.5 billion in excess reserves. So they want to maintain a cushion between these two. Of course, they don't want the full cushion to be in Bitcoin, but if they're using 15% of their net profits to increase Bitcoin holdings and the rest presumably to bolster the reserve in cash or cash equivalents, well then both of those figures are just going to keep growing over time. So essentially what he states is 15% of net monthly profits will be used to buy Bitcoin, and we are entering the race here to acquire a lot more over time. Then hilariously, he photoshops himself in as Gladiator there. He says, why Bitcoin and not something else? Well, philosophically, because Bitcoin is the epitome of a sound and secure monetary system with its decentralized nature and scarcity. Bitcoin is revolutionizing the concept of money and challenging traditional finance. Bitcoin has defied expectations, shattered boundaries, and provides access to the global financial system to anyone with an internet connection. Here. So an interesting comment on this one, is there any chance of increasing the 15% allocation to a higher number in the future? Paolo responds, we prefer to be conservative as we take risk management seriously. We're not in a race with others, but he is not ruling it out there. But of course, that brings to mind the whole Microstrategy. Could they be competitive to Microstrategy and Sailor here? More on that in just a second. Let's tackle a bearish argument. Hal Press had this one to say. So Tether yields around 4% on, say, 80 480 billion, so 3.2 billion annually, he states. 15% of this is 480 mil annualized, or 120 mil a quarter. And he states that this is at most enough to offset 1.5 days of miner sell pressure per month. Roughly 900 Bitcoin enter circulation each and every day. So that's his kind of mental model on this. But he states it's obviously not nothing, but it's not going to materially change the flow picture. I'd still rather own ETH. So a bit of an ETH maxi response to this. Then taking things an extra step further with his mental model, he says over the next 6 months, we have the US government Bitcoin holdings coming to the market, approximately $1.1 billion worth, around $2 billion worth of Mt. Gox, and $3.6 billion worth of miner sell pressure, he states. So that is 6.7 billion. Okay, Tether can absorb 300 million, but what about the other 6.4? That of course assumes all Mt. Gox Bitcoin holdings get dumped. We see a huge amount of US government sell pressure hit the open markets, which may be unlikely. I'm thinking they're going to probably have some OTC deal. And then of course the miners, that is just a continual market dynamic. I wouldn't be too worried about the miners here, as price has been ticking on up nicely, even with them continually having to sell some for profits or operational expenses. But that is kind of one of the bearish arguments I've seen presented on Twitter. So I wanted to have this in here for a bit of a balanced case. So within the statements, Tether told us they made around 1.5 billion in net income in Q1, around 500 mil per month. If they are to put around 15% of net profits into Bitcoin, that's around $75 million of Bitcoin each and every month. At current market price, $75 million is around 2,800 Bitcoins they could be purchasing. So on that basis, 900 Bitcoins per day go to miners. That is actually 3 days worth of Bitcoin miner selling absorbed by the Tether bids. So I certainly don't think this is a nothing burger. This is a big player entering the space and accumulating Bitcoin at a wholesale level. Then if we look at the stablecoin standings here, you can see from the top 5, the only one with an increased circulating supply is Tether over the last 30 days. All of these charts are going down. Binance USD is running off. You can't even use USDC really over on Binance Exchange. So maybe this 5 bill gets added to Tether here. The only ones that are actually starting to play any form of catch up are Pax Dollar right now. And you can see Gemini's GUSD down here as well, making a bit of a stab and run higher. But on the whole, these big players in the stablecoin space, Tether is growing and growing and growing. So what we have in fact is the total supply of USDT going up over time. The more USDT in circulation, the higher the potential yield that Tether is making and thus converting into Bitcoin. As you can see from the chart there, it's pushing towards all-time highs in terms of its market cap. Yet again, USDC had that huge falter around the banking collapse, a bit of loss of faith, and it is rather ironic that Tether is now the preferred stablecoin of choice. As Elon tweeted out before, the funniest outcome is the most likely. And so if Tether can continue with its growth, continue with its increasing profits, it will be buying up more and more BTC. Just for perspective here, BlackRock Q1 net income, 1.16 billion. That's freaking BlackRock. Tether did $1.48 billion. So game theory is going to come into play here. These are the top Bitcoin wallets on planet Earth right now. And as we know currently, Tether has around 1.4 billion in reserves. I'm not sure which wallet it is or whether it will be split amongst a number of wallets in here, but say they're around the 10th biggest holder in the world right now. We know that Saylor is taking up the number 3 spot. Well, surely there's some game theory around the biggest wallets wanting to accumulate the most BTC the quickest. And if other entrants come into this space, such as sovereign wealth funds, maybe some nations, well, there's not going to be enough Bitcoin to go around. And what we know about crypto, it's a narrative-driven market. So the fact is, in the previous market cycle, Microstrategy stepping in and just acquiring Bitcoin like crazy people, that was enough to spark a Bitcoin run. Elon Musk with Tesla then acquired. But this time round, we have USDT and Paolo making a major bid. So could this spark others, maybe the Saudis, to start max bidding unironically? And what does this mean for MicroStrategy as well? So over the first 4 months of the year, you can see here, we've had 2 confirmed purchases by Microstrategy, taking their holdings from 132,000 Bitcoins to 140,000 Bitcoins. And as we just saw, we believe that around 2,800 Bitcoins per month could be purchased by USDT. So over that same period, it's a very similar number to that of the Sailor bid. It's probably over 9,000 Bitcoins. If Bitcoin obviously goes up in value, they'll be purchasing less quantity of coins, but we literally have Sailor Mark II entering the space right now. So I've seen some bearish arguments out there, but for me, this is nothing other than bullish. You have a huge purchaser of Bitcoin. What more could we possibly want? So let me know down in the comment section, what do you make of this USDT bid entering the space? Are you bullish on it or bearish on it? I'd love to hear your arguments. Drop me a comment down below, guys. Subscribe if you're new, and I'll see you in the next one. Peace.